Very good morning, friends. Welcome you to this 10th session for Quality Cafe. Very happy to note that you are sparing your Saturday mornings with us for quality discussions. The topic for today is importance and significance of the engagement letter and the management representation letter. Let us start with the address by the convener, Center for Audit Quality, CA Vishal Doshi. Sir, over to you.
Thank you, Ruchika. Very good morning to all the participants to this 10th session of the Quality Cafe on the significance of engagement letter and the management representation letter. I take this opportunity to welcome the learned speakers and the panelists, CA Parveen Kumarji and CA Mohit Bhuteriaji, and welcome them to this Quality Cafe session. Thank you, sir, for accepting our invitation. Honestly, we were in two minds whether month of April being a peak audit season, whether we should carry on, but we decided that we do not want to break because we have this, I would say, SOP that the last Saturday of every month, we spend 2 hours on the quality issues with respect to the audits and assurance, which is the I would say the important aspect when it comes to the Center for Audit Quality. And we said that let us start with the basics, and we could not have anything better than as the basics than the engagement letter and the management representation letter. I also take this opportunity to thank the Deputy Convener, CA Priya Kumarji, who because of her travel schedules is unable to attend, and CA Atul Gupta ji, our respected past president, had some last minute travel schedule and also could not attend. Friends, we have very purposely chosen this very basic topics today, especially like I said, April being a busy season. We have the two standards, the SA 210, which deals with the terms of the audit engagements, and SA 580 on written representations that would be covered. We believe that both these letters, the EL and the MRL, are very, very important. Because while the EL, it defines the terms of engagement and is issued by the auditor, the MRL, it includes the management responsibilities and it is addressed to the auditor by the management. Many times when it comes to EL, I just in a layman's language, when I think, and we have two learned speakers who can correct me wherever I'm wrong, that when we go for an audit, we normally ask for a commercial contract and understanding between the the purchaser and our client, or our client and the seller, or the service provider. And when many times when I look at the audit service, I said that what is the the contract or the letter or the I would say a binding document on the two parties, and what comes to my mind first and foremost is the engagement letter, because there we typically list out the management the management responsibilities, the auditor's responsibilities, and a lot of things that gets covered. And therefore, I believe that just like any other commercial contract, the engagement letter is something which is very, very important. And as the standard says, we must not start any audit without an engagement letter being signed off. I think that is the first and foremost thing that we need to follow. Friends, we have two very learned speakers today. CA Parveenji has over 32 years of post-qualification experience. He's a commerce graduate who holds a diploma in the ISA and besides the certification in IFRS from the UK. He is also a member of our AASB and earlier was a member of NACAS, the Accounting Standards Board, and the ESC, besides various research groups and committees of the Indian the ICI. Parveenji has the experience of working on large number of stat audits as well as internal audits, forensic fraud investigation, and IFRS transitions. He has been a speaker at national and international forums on his subject of expertise, and has also been a faculty with reputable institutes like the IMT, NAAA, ICI, ICSI, ICWI, CAG, NIFM, MCA, IICA, DU, and there is a whole list of them. He has his book, which was published by the CCH, and has written many papers and articles for renowned journals and magazines. And Parveenji has also been invited to present papers by reputed institutions, like I said, not only in India, but also internationally in Japan, Nepal, Myanmar, Dubai, Singapore, besides various large companies and branches of the ICI across country. So with these words, I welcome Parveenji to this webinar of the CAQ. CA Mohit Bhuteria ji is a special invitee at the ESC of the ICI and also a co-opted member in the study group of ICI on guidance note and upgradation of the existing accounting standards on the basis of corresponding Ind AS and the guidance notes. He is a member of the Governance Council of the Peerless Skill Academy, which is a joint initiative on skill development between the Peerless General Finance and Investment Company Limited and the Ramakrishna Math and Mission. Mohitji has contributed articles in various journals issued by the study circles under ICI and has contributed in technical guides on functioning of the audit committee issued by the ICI in 2018 and also on the guidance note on CARO 2016 and CARO 2020. So with these words, I welcome Mohitji to this webinar on the EL and MRL. Friends, before we delve into the subject and take the question answers, so the session we would run like this, where we would request our experts to give their opening comments on the EL and the MRL. Then we will have some questions from our side, and that would give an opportunity for the participants to also throw up some questions, which Ruchika and the team, we would take it forward, and time permitting, we would ask your questions also on your behalf to the experts. And then at sharp 1 o'clock, we will wind up because we don't want to encroach more on your Saturday morning and your, I would say, Saturday lunch that you might be wanting to spend, have with your family. So with this, I would now request Parveenji to give his opening remarks on the EL and the MRLs. Over to you, sir.
Thank you so much, Vishalji. Thank you very much for giving us this opportunity to be part of such an important topic. And Center of Audit Quality, it's really this protocol of having a session on Saturday is it's the best one, because this is something which will put a discipline into all of us. And we will and when I looked at the topic which was assigned for today's, so I was really happy that at least we are going back to the basics. We are looking at the basic things which are required. And nowadays, the audit profession as such has become so risky. So this particular aspect of having an engagement, written engagement, which is signed by the client and by the auditor, it actually will mitigate the risk of the auditor primarily. So once you look at the requirement of the Companies Act, Section 143(2) requires you to have an auditor and a engagement with an auditor to provide an opinion on financial statement. So in a way, the Companies Act also requires you to enter into an arrangement with the auditor who will, give an opinion on the financial statement. When we look at the other auditors like SEBI, RBI, or other regulators, IRDA, they also require an auditor to, go and do audit of those entities. So Institute has given, as you rightly said, I'll be primarily talking about engagement later. Institute has, issued this SA 210, which is a standard on auditing related to terms of engagement. And this is in alignment with the international standards on auditing. So it is very important to have this written engagement. And you very rightly said, sir, that no audit should start before having a written engagement letter. So this will clarify the terms and conditions of the engagement and terms in which the audit is being carried out. So the way it will clarify the background. It will give you the background that this audit will be conducted under Income Tax Act or under the Companies Act or under a special purpose framework. And after giving the background, it will clarify the scope, that whether the auditors are required to do statutory audits or they are also required to do tax audits, or they are also required to give any certificate or any other service which is permitted under the Companies Act, which they need to give. This engagement letter will also give you a timeline that you will need to complete this audit, let's say within 45 days of the end of the quarter or end of the year. And then these timelines, that when audit team will come, how they will start, which will be the team members, which will be who will be the engagement partner, and who will be the key engagement director or a person. So these terms will also be explained in the engagement letter. And of course, you will also agree on a commercial terms on the professional fees, which will be charged by the auditor, from the company or from the entity for which the audit is being done. Now, nowadays, when the engagement letters are being sent by the auditors to the company or to the client for sign off, there are certain terms which are being put, which are terms of the engagement. Like, give you some example, that our team will be working in your office, your premises. It will be your responsibility to provide them with the data, with the environment, working environment, the desk, the computer, the internet. And, in case you are working on a ERP, then ERP data access should be given, whichever is required. And then there are some limitations also which can be put into these engagement letters. That, okay, the jurisdiction of this engagement will be, let's say, Mumbai. We are working in Mumbai, and we will be having, this audit will be carried out under the jurisdiction of Mumbai courts. So tomorrow, if the client wants to, take you to a different state and put a case there, in case something goes wrong, you can always say that we agreed on our terms of engagement because it was, the jurisdiction was in Mumbai. Let's have our, discussion in this state itself. And then there can be other limitations also. You can put your limitation on your liabilities also. That if anything goes wrong, or if anything, if any third party puts any claim or something, our liability will be limited to one time of the fees which we have received. So many people have started using these terms as part of the engagement letter. And those engagement letters, if written and signed by the client, will be, helping not only the auditor, but also to company, because they will understand clearly what is the responsibility of the auditor. What are they going to do? Are they going to give an opinion, or are they also helping us in some other activities as well? So expectation gaps which are happening nowadays, there has been a lot of research going on and a lot of debate going on, that there is a expectation gap, huge expectation gap between what the auditors are doing and what is perceived by the society at large, or what is perceived by the regulators that what auditors are doing. So give you one very small example that, one of the regulators, we were having a discussion, and they said that despite auditors certifying the financial statement, why there was this kind of a fraud. So we had to explain to them the role of auditor is not to certify. The auditor is not giving true and correct opinion. Auditors are giving true and fair opinion, in which they are saying that we have applied auditing standards, we carried out our audit procedures, and in our opinion, these financial statements are giving true and fair opinion. So they are not certifying that, okay, there cannot be any mistake or any fraud in these financial statements or in this company. So there are certain limitations under which the auditors carry out their procedures. So in a way, this particular document, which is audit engagement letter, will be a significant risk management tool for the auditors themselves, because they will be able to demonstrate to the regulator that our responsibility was limited to this aspect, and we carried out our audit procedures according to this particular these auditing standards only. They can also put anti-poaching kind of clauses in the engagement letter that if our team is going to do the audits, please do not offer them employment, because nowadays, as you know, having it's a resource crunch everywhere. So I've seen many of the auditors are putting this clause that our audit team, you cannot hire them as your employees in next 1 year, or if you are hiring, then you have to give us 6 months of their salary as compensation for that. So at least you are mitigating your risk that your people who are going to do an audit of a reputed client, so they will not be poaching your clients. And then you're very clearly defining the responsibility. The preparation of financial statement is the responsibility of the company and the company's team, and our responsibility is clearly review those papers, carry out our audit procedures as mentioned in various auditing standards, and we will be giving an opinion as defined in the reports, the draft of which has been suggested by the standards on auditing. The auditing report, the key reporting will be as defined in the Companies Act or as defined in other regulatory frameworks. So these engagement letters will be very critical. I agree with you that before anybody starts any audit work, it is critical to have an engagement letter signed and in place. Tomorrow, in case any regulator calls you, the first thing which they will ask is also the engagement letter. Please show us your engagement letter. And also please mind it that please remember that this is different from appointment letter. Appointment letter is what the client will send you that you have been appointed as the auditor. That is appointment letter. But what we are talking about is an engagement letter in which you will accept the appointment and will also put certain terms and conditions. So these are my opening remarks, and I hope we'll have a very fruitful discussion on this particular topic, though it is very, very generic also, because it doesn't go into details of accounting and auditing, but still we are going to have an interesting discussion around it.
Thank you, Parveenji, for your opening remarks on the engagement letter, and I think you very aptly covered some very, very important aspects. And I would request the members to please note them down. One is that engagement letter is not equal to appointment letter, or vice versa. The appointment letter is not equal to engagement letter. They are two independent letters or documents which the auditors should have in their files. So I think that was one important aspect. Second is that it does not apply only to company audits or audits under Companies Act, but it applies to all audits, including tax audits or audits by other regulators. Or I would say go a step ahead even for some other assurance functions on certain aspects and certain certifications also, where the engagement letter becomes extremely important. Other important aspects was the preparation of the financial statements, which is the responsibility of the management. That has to be very, very clearly be there worded in the engagement letter, and also about the liability clause and the a very interesting aspect which I also heard is the anti-poaching. I really love that part, Parveenji, because I understand that there is a lot of lookout for good resources, and it should not happen that the resources we train finally gets so poached during the course of an audit engagement. So some very important aspect on. But now I would request Mohitji to give his views on the MRL. And many times, Mohitji, when we interact with our friends, they say that, something which you typically is not auditable or is questionable, you put it as part of the MRL. I would request you that whether MRL is a substitute for audit. This is how I would look at it. So over to you, Mohitji.
Yeah, thank you, Ishanji, and I must compliment Center for Audit Quality for this great initiative. And both the topics, engagement letter and management letter, they are very, very important in the context of the audit, and often we ignore all them. Many times we may have performed everything, but we have not successfully obtained engagement letter, which Praveenji and you also said should be obtained before the start of audit. And when we talk of written representation, this must be obtained before the closure of the audit, before signing the financial statements. So one is at the start, one is at the end. So Vishalji, you have tried to cover everything with these two standards. So essay 580, if I about written representations, if I talk in a layman's language, what are these written representations? Are these audit evidence? Are these substitute to audit evidence? Yes, they are audit evidence. They support audit evidence, but they are not substitute to other audit evidence which we have to perform, which we have to obtain using other applicable standards on auditing. So written representations is something like a written statement or a letter given by the management to the auditor to confirm certain matters to support or to support audit evidence. And some critical points on this, that this written representation should be only obtained from the management or those who are responsible for governance. It cannot be obtained from one who does not have the authority to issue you written representations. So one point, like when we obtain a written representation, we generally include an opening paragraph that the financial statements duly approved are presented to the auditors for their signature and report thereon. So this is very important. Why? Because generally what happens when we obtain when we sign the financial statements, the prerequisite is that these should be board approved financial statements. And in the recent case, NAFRA also held that the auditor signed the financial statements without obtaining representation from the management that these were board approved financial statements. Then who has the authority to issue these written representations? Only someone who is authorized by the company, someone senior in the management who is authorized by the board or by those charged with the governance to give representations to the auditor. So as Vishalji was saying, written representations provide necessary audit evidence, but they do not provide sufficient audit evidence on their own about any matters which they will deal. For example, in the financial statements, in the written representations, the management writes that, okay, we confirm that the financial statements comply with the provisions of the, say, if it is a financial statement prepared as per the Companies Act, that it is compliant with the Companies Act, it is in compliance with the accounting standards issued under the Companies Accounting Standard Rules 21, or for that matter, companies Indian accounting standards, and they are free from material misstatement, fraud or error. So this is a statement which the management writes to, but it is not an audit evidence in the sense that it does not absolve the auditor from checking compliance with the applicable framework relating to presentation of financial statements. So it is something which I say in layman language. One may say anything orally, but when he writes, and a person of responsibility writes, he writes with, only after confirming to the specific fact that yes, whatever he is writing in the written representation to the auditor is devoid of any lies, or I should say is after he has reasonably assured that whatever he is writing, it is based on some evidence, or it is free from doubt. Now, what are the objectives of the auditor? Auditor, when, as Praveenji was saying, that we have to obtain from the management engagement letter that the financial statements are the responsibilities of the management. So when they prepare the financial statements and when they give us the financial statements for review, and thereafter when we obtain written representations, we obtain a representation from the management that they have fulfilled the responsibility for preparation of financial statements, and the financial statements comply with the applicable reporting framework. If it is a Companies Act, the Companies Act. If it is audit under the income tax, if it is audit under any special act, then they comply with all relevant regulations. Again, it is very important that they provide that whatever information what we have sought, they have provided all of us, and whatever was required to be provided, they have provided again all of us. So it should also provide that they have provided all the relevant information as agreed in the terms of engagement. Therefore, when we sign the terms of engagement, we ask them that these are the prerequisites, these are your responsibilities, you comply with the responsibilities. When they prepare the financial statements and give it to the audit, and when we sign the written representations, they affirm that yes, we have provided all the relevant information and all the access to all books, records, documents as agreed in the terms of engagement. And again, that all the transactions which have been recorded in the financial statements, which are required to be recorded in the financial statements, have been duly recorded. So let us say, in case of accounting policies, when we obtain representations as to, say, accounting standard 1 or disclosure of accounting policies, we say that yes, the accounting policies which are there in the through which these financial statements are prepared comply with the company's accounting standard rules or company's Ind AS rules, as the case may be. And if there is any departure for those, they provide the representation. If there is any change in accounting policy to comply with the relevant law regulations, again they provide information relating to those. If, say, a fire has occurred and due to which they are unable to provide certain audit evidence, again they would write in the written representation like, look, there has been a fire or there has been a lockout, and look, the factory is closed, and therefore we are unable to provide you audit evidence in relation to the factory that has been closed. Again, that is an important representation for the WAC, because such representation, again, and inability to provide audit evidence may lead us to qualify the audit report. So it is not that the audit, that in written representation they have to as per the audit they are required to provide everything, but to the best of their ability they have required to their ability. Now, written representations will also provide management that what is their responsibility, what are their responsibility, in relation to their responsibilities, everything is laid down. So in the written representations, to the extent required in relation either to the accounting standards or in relation to the compliance with the Companies Act or any other applicable framework, the auditor should try to cover as much things as possible. And these written representations must be obtained in writing and before the financial statements are signed by the auditor. So this is all about audit evidence, about written representation.
Yeah, thank you, Mohit ji. And I think you cleared a lot of air on the written representations, the MRL that we normally mention, that is to support the audit evidence, and they are not by themselves any audit evidence. In fact, they are confirmation of significant matters that have occurred during the course of the audit. And a couple of important things which you mentioned, again, the key takeaways, I would say. One is the authority to sign the management representation. So typically it should be a board member or those charged with governance that we normally say. But if there is a delegated power, because I have seen some friends asking, कि कोई accountant sign करता है या कोई senior accounts person sign करता है. I believe what Mohit ji, you can correct me if I'm wrong, that yes, that person can sign provided there is a board resolution authorizing or giving authority to that person to sign the written representation. Otherwise, the members should not accept the written representation that is signed by anybody other than those charged with governance. So that was a very important aspect which Mohit ji covered. And he also mentioned that, like he gave the example of fire, floods and all, that if there is a records or documents are missing, there can be part of the written representation, but that does not take away our responsibility as auditors to qualify or modify the audit report if it requires a modification and sufficient appropriate audit evidence the auditor is not been able to gather to form his opinion just because something is mentioned in the MRL does not give us that I would say liberty to give a clean report, and wherever a modification is required has to be given. So I think that was a pretty excellent opening batting by both our openers. I would say दो का ही team है, but still the first two overs, the slog overs went off pretty well. We scored good, just like the yesterday's match. Now coming to the some specific questions. Farinji, first question to you. That many times members feel that with the large number of audits, company audits normally is a 5-year appointment, and tax audits is typically a annual engagement. So now, what is the requirement with respect to engagement letter in case of recurring audits? Whether annual उसको हर साल नया करना पड़ता है, या once taken is okay. So what exactly should be done? Should it be done? Because many members feel that every year this exercise is painful. So what can be your solution to this?
So Vishal bhai, this particular auditing standard, SA 210, this is very, very, it's one of the most easy standard to read. It gives you guidance on the issues which comes up in the mind of auditors. Only thing which is required is just to go through the standard, and it will very clearly give a guidance on what should be done in specific cases. Like, for example, in case of recurring, audit, when you are appointed as auditor, and that, let's say this is for 5 years, a natural question will come into mind that whether every year I need to have a separate engagement letter or not. So there are paragraph 13, paragraph 14, and then there is a very detailed application guidance in the standard itself, which gets into, para 827, 828, 829. Which gives you direction on, there are certain places where it is necessary to take a revised engagement letter every year, where there are some changes, there are some conditions which are there. Like, for example, in case there is a change in regulatory framework, and in case there is a change in financial reporting framework, let's say, for example, the company was or the entity was reporting in accounting standard framework, and they moved into Ind AS framework. So the previous engagement letter was talking about that framework. Now it is compulsory for auditors to take a new engagement letter which will talk about the new framework. Similarly, in case there is a change in the reporting requirement, let's say the company goes into the IPO, and there is a regulations related to SEBI, and other regulations are started applying, then it is important for the auditors to take a new engagement letter because of these changes. There may be a change in the nature and size of the business. So suppose the company has done some acquisitions, or company has got acquired, but the auditor is continuing, but there is a change in the nature, in the size, in the complexity of the business, then auditor will need to take a fresh engagement letter on the next year. There may be a change in the ownership, like, for example, those who charge with governance, or the ownership of the company has undergone a change. It is important for auditor to take a new engagement letter. There may be, special terms of audit engagement. Suppose earlier they were asking you to close the audit by in next 3 months. Now they want the audit to be closed within next 1.5 months. So there is a change in the timelines. So it is better to have a fresh engagement letter, or in case there had been, let's say, for example, I'll explain it in simple terms. Let's say you enter into an engagement with the company, and your engagement letter is signed, and during the year, the discussion started happening. Company would say, no, you were also supposed to report on internal financial controls. You said it was not required by the law, so I did not report. The company said, but we understood that auditors are going to do that. In any case, you are supposed to do your audits based on, internal controls mechanism, and you will be applying control approach, and you would be looking into internal controls. Why have you not reported? So there had been some misunderstanding in the engagement. So it is better in the next year, you put down in writing all the details and clarify your scope again. So there can be certain circumstances which has been given in the auditing standard itself. But if you apply your common sense also, even then you will find the same answers. In case those situations happen, you need to take a new engagement letter in the recurring audits also. But when we look at the practical scenario, many times the auditor may continue with the engagement letter which has been signed and continue, carrying out these audits, because that engagement letter was for, let's say, for appointment was for 5 years and you have accepted it for 5 years. Practical guidance or practical approach is that even if it is referring to that engagement letter, but the auditor should take revised and a fresh engagement letter, specifically in conditions which have been mentioned in the auditing standards, SA 210, and application guidance is giving very detailed understanding. So wherever required. So practically, when we see, there is a simple letter referring to that engagement letter should be sufficient enough.
Rinji, just a quick response that when you mention that the fees should also be part of the engagement letter, then if there is a revision in fees every year, if the fees can be separately revisit the EL each year, because I think that is something important which would which everyone of us would be interested, because fees revision we want every year, definitely.
Yeah. So that is what when I was mentioning about practical aspect, then a small letter referring to the previous engagement letter and saying that from the next year the fees will be this much, the taxes and out-of-pocket expenses on actual will be separated. So that is certainly one of the trigger point for having a fresh letter every year.
Right. Thank you, Parvinji. I think you have made it very clear that the standard, the SA 210, very clearly lays down the circumstances when, in case of recurring audits, fresh EL is required about the new framework, the change in the reporting requirements, the change in the nature and size, timelines, these other important aspects which would be there, which would require a change in the engagement letter. So, friends, while a fresh letter is not required every year, but in change in any of these conditions or what has been given in SA 210, in such situations, there would definitely be a revision of the engagement letter that would be required. Mohitji, when would the audit, when should the auditor accept change in terms of audit engagement? And whether there can be situations that the changes can be considered unreasonable, and what should the auditor do in such situations?
Yeah. So SA 210 deals with these changes in audit engagement. Now, the changes in audit engagement may be on different accounts. It may be something which has happened very genuinely. There has been a change in circumstance, and this may result to again a change in engagement. There may be a scope limitation, or the management may want audit service to be changed to a review service. Now, if there has been certain misunderstanding, there may be some misunderstanding or change in circumstances concerning the nature of service originally requested, then it is a reasonable basis. Then a change in audit engagement is acceptable. But if say a change in audit engagement is as a result of inability to obtain sufficient appropriate evidence, or again some restrictions imposed by the management on the audit, or then certain scope limitations, then perhaps these changes cannot be accepted. And if these changes cannot be accepted, then again the auditor has to consider and see how would you respond. In fact, in circumstances of each case, again having regard to the guidance from SA 210, he may consider withdrawing from the engagement, or he may consider bringing this fact to the notice of the regulators as applicable. But in any way, scope limitation, under the standard scope limitation imposed by the management is not acceptable, and it is not reasonable also.
Yeah, Mohit, can you just, for the benefit of our members, give some examples of what can be scope limitations?
So if the management says, like many times it happens that trade receivables, for trade receivables we want, say, external confirmations, and management does not provide us data and say, okay, you take the subsequent records and just verify as a substitute, any substitute audit evidence. So that limitation may not be acceptable to the auditor. Like, say, for physical verification of inventories, they say, okay, we will provide you a physical verification done by a third party. We will not allow you to visit. Then there is a scope limitation. So maybe initial understanding was that, yes, you will have full access, but then they say that, no, you will not have access to this on account of some reasons.
So Vishal,
Right.
can I add to this?
Yeah.
Yes, sir. Yes,
Some
Praveen.
more practical examples, like a lot of our professional brothers, they are working as small and medium practicing units, and there are a lot of people who are doing bank branch audits. So when they go to branch of a bank and start doing the audits, the branch may say certain data is not available. Like, for example, if they want to check whether the provisioning has been properly done or not, and they want to see whether the accounting system, their ERP system, is capturing the date of last receipt or not. And the bank branch says that this data cannot be, cannot be given to you. We cannot capture that data with you. We cannot capture that data and give it to you. This becomes a scope limitation, because in that case, auditor will not be in a position to say that whether the provisioning has been correctly done or not, whether the categorization of these accounts is standard, substandard, non-performing, that is possible or not. The auditor will not be in a position to say. So that becomes a very serious scope limitation. Even in the case of company, private client, when when they say that, okay, this is a confidential information. You're doing audit of a manufacturing company and you want to see what are the changes, happening in the inventory and all. And they say, we cannot show you the data related to inventory because this is a confidential information. So that becomes a scope limitation. So a couple of other examples also I thought I'll give in addition to what he has said.
No, I think that was important, and maybe Ruchika, we might need a quality cafe session on scope limitations itself, it seems, because many times what happens, sir, and I'll tell you, because of our interactions with members generally, that there are a lot of these things which are happening in a day-to-day, audit practice, which many times, members don't realize that it is a scope limitation. And then they try to say that, it is not a material element in the financials or not a material amount, or ignore karte hain, ya fir they do some alternative procedures without understanding the increased risk that they are carrying because of that scope limitation. I feel these are some another, I think, qualitative aspects which we need to share with our members, though it looks a very small area, but when we look at different elements and the activities which auditors carry out, that itself can be a huge, I would say, discussion in itself.
So, for example, if you allow, Vishalji, we have
sir.
time. So, one of my friend, he was doing audit of a company which had a subsidiary outside India, and so this friend called me and asked me that this company is had invested certain amount in subsidiary outside India, and they are saying that they are doing the impairment testing. So they are thinking that the investment is gone. But they are not able to get the financial statements from that company because of certain reasons, their jurisdiction and all that kind of stuff. So he said that the company is doing the impairment testing. So they are removing the, there is nothing will come into the assets and liabilities. So what do you think? Is it okay? Can I accept it? So then I told him that, boss, this is a serious scope limitation, because you do not know whether the company is actually running into profits and whether the company has done so many activities, or whether that small company, which is being projected as a small company, and Your client is doing an impairment testing and making it 0. But you don't know whether this is a huge company, or that company might have gone into some significant borrowings, or they got involved into some frauds, which will have an impact on the head office also. So there can be various ways where people may feel that it is not a scope limitation. They have done 0. So it is fine. It is gone out of the balance sheet. But going out of the balance sheet is not a solution, right? It's a limitation. You don't know. There can be another side of the story. So this is something which is really serious. I agree with you that there has to be one session only on scope limitation.
When we talk in a year or less, when we talk of the quality, audit quality, and that aspect. Parveenji, my next question to you, Mohitji mentioned about the MRL and the authority to sign the written representation or the MRL. Sir, anything with respect to the engagement letter, that who should sign on behalf of the entity?
Much more serious, because somebody is engaging you audit, and it has to be percolated from the board of directors. And generally, the audit committee monitors and appoints the auditors, and they send you appointment letter, which is also containing extract of the resolution also. But when you are giving an engagement letter, which is clearly defining the terms of engagement, the limitations of the engagement, the fees agreed, and every other aspect. So this engagement letter has to be signed by somebody who is actually authorized by the company to engage the auditors. So practically speaking, the company, the board may advise CFO or one of the directors, or 2 directors can sign. But generally below that level, the authority is not percolated. Like, for example, to the controller level, they do not sign they do not carry that kind of power to sign the engagement letter. It has to be either the CMD or the board of directors, or they can authorize the CFO to sign it. So this is something which is really a serious matter, sir.
So typically, we should not accept anybody below the CFO rank to sign the engagement letter. Sir, again, in continuing with that, when it comes to the...
Sorry to interrupt, but in all circumstances, as both of you are also saying, in all circumstances, whosoever sign has to be authorized by the board.
Right. Even CFO needs an authority from the board.
And even if one board member signs, he has to be authorized by the board.
He has to be authorized.
So this is very important. Yeah.
Right. Yeah. Thanks, Mohitji.
Yeah.
In continuation, that let us say that there is an audit firm who is the auditor of the component as well as, I would say, the holding company. Then whether 2 separate ELs are required, and or you can have one EL, and what with respect to the consolidated financial statements, whether a separate EL is required for that.
So Vishalji, in this case also the auditing standard, it gives a very elaborate guidance in the application guidance. When you look at paragraph 824, 825, 826, you will get an answer very clearly. And I'll read from there, audit of the components. When the auditor of a parent company is also auditor of a component, the factors that may influence the decision whether to send a separate audit engagement letter to the component, these factors include the following. Number 1, who appointed the component auditor. Number 2, whether a separate auditor report is required for that component. Number 3, whether there is a legal requirement in relation to audit appointment. Or number 4, degree of ownership by the parent. And number 5, degree of independence of the component management from the parent entity. So when you look at these conditions which are defined in the auditing standard, it gives you a clarity that if you are doing audit of a consolidating entity as well as component auditor, generally if you are giving 2 different opinions, then you will need to have 2 engagement letters. there can be other conditions also, like independence. The appointment will be done by the board of the component, and sometimes the management of holding company and the component might be separate. So generally, if the basic rule is that if you are giving a separate report, you need to have a separate engagement letter. That's the basic. But otherwise, if you are doing only one, consolidating audit, in which you are also doing audit of a component and you are not required to give any separate report, and then you can see the other areas, like, for example, whether there is a separate management or there is an independent people who will look into your component reports. So then in that case, you can have one engagement letter, which will also mention in the scope of work that you will be carrying out audit of the component as well. So in practical scenario, because the reports are generally being given separately, you need to have a separate engagement letter as well.
Correct. Right. So where separate opinions are required, separate ELs are also required in that case. Mohitji, what would be the case in case of the joint auditors? Because in many companies, a single EL signed by all the auditors would suffice, or each audit firm would have to enter into a separate EL with the company.
Yeah. So, sir, SA 299 deals with these joint audits. Now, in case of joint audit, what happens generally, there are certain specific areas allotted to each of the joint auditors, and there are certain areas which are common to both of them, and they do jointly the audit. But what para 11 of the standard SA 299 says that the joint auditor shall obtain common engagement letter and common management letter. So this is how is it is.
Right. Now we change for some time again to the written representations. Parvinji, SA 450, it requires the auditors to accumulate misstatements identified during the audit, other than those which are clearly trivial. Now, can the auditor communicate to the management a threshold amount for the purpose of the written representation?
So, in the accounting framework, there's a very basic component which is called materiality. And when you are carrying out the audit, you, of course, are carrying out audit, keeping this materiality issue in perspective. So there are many times there are some misstatement which were there in audit, or there are some errors. There can be some. So when you are making a presentation, or you are asking about the written representation, so you can generalize it. Although paragraph A14 of SA 550, it gives you a very detailed guidance, but specifically you can identify that how in a broader term you can talk about those issues. Like, to give you some example, if there are, let's say, a very poor example, but there is an example that there is some error which was a minor error, but it was related to casting and those kind of stuff. So you can talk about controls in the representation, and you can you can ask the management and you can communicate that. But yes, if you are doing audit of a very large company which is running into thousands of crores, and there are some mistakes or some misstatements which were in hundreds and all, of course you will not like to spend too much time deliberating on very small and trivial items. So the guidance is there in the auditing standards, but we can certainly skip to it. But my practical advice would be to cover on a broader level, that there were some misstatements were also observed, which are, let's say, in calculations of depreciation, or those kind of small little things.
Sure. Mohitji, what is the date and period that should be covered by the written representations?
Yeah. So this is very important. So what happens? Let us say we are doing audit of a company, or say for that matter a tax audit under Income Tax Act. So management has to provide written representations. Now, balance sheet is drawn as on 31st March, but there are between the balance sheet date and the date of signing the financial statements, again there is a time lag. So what the standard says that you see, written representation should be obtained something on a date which is very near the balance sheet date, because between 31st March and date of signing financial statement also some things may have happened for which written representations are required. And before you sign the financial statement, you should have received the written representations, because again these are important audit evidence. Again, essay says about, therefore say we are issuing a report for some IPO, and these are not for 1 year but for multiple years. Then we require written representations for each of the years for which the auditor is expressing an opinion. Now, again, the standard lays down one point that, look, it may so have happened that now you are providing report, an opinion on the financial statements for 5 years, and management may say that, look, I was one that we were not associated in that year, but that would not again diminish their responsibility. So to conclude, the representation letter should be near the date of the balance sheet, and before the date of the balance sheet it should be with the reference to the year for which the auditor is expressing an opinion. If there are multiple years on which the auditor is expressing an opinion, then the representation should be provided for each of the years.
Right. And Mohitji, if you can just also clarify that how important it is for the written representation to cover aspects on the events occurring after the balance sheet date.
Yeah. So that is very important, because you see, events occurring after the balance sheet date conform to the transactions or situations which existed in the balance sheet date are quite important. Therefore, say for in case of an example of, say, we may have a trade receivable, and now that party, the company has taken that party to litigation, on knowing that that the financial position of that party has deteriorated, and that the case has been filed subsequent to the financial year. So again, that is very important evidence, because it may affect the impairment of the trade receivables or impairment of these trade receivables. Now, there may be a situation that some insurance claim that there was a loss of stock by fire, and insurance claim had been launched, and that insurance claim may have been accepted before the date of signing the financial statements. Again, these insurance claims may have to be recognized in the financial statements, because they conform to the condition that existed at the date of the balance sheet. So again, from all those perspectives, anything which has a bearing on the financial statement, on the assets and liabilities, and truth and fairness of the financial statement, but which confirms, because if a fire, say, has happened subsequent to the date of the financial year, then perhaps even if it is an information which maybe management may state in the financial statements as a disclosure, but which does not affect the asset and liability, but which a fire has occurred before the date of the financial statement, and conforming, and in relation to that something action has been taken, including lodging of insurance claim, acceptance or rejection of insurance claim till the date of signing of the balance sheet, then that occupies importance.
Right. So again, maybe for the sake of repetition, but I would mention that a representation is not an audit. It is not an alternate to audit also. Like I'm saying, I'll keep hammering these words. Please don't mind, because these are some very important aspects. Yes. And the preparation of the financial statements, including the compliance with the accounting standards, primarily is the responsibility of the management. And our responsibility is to review and provide our opinion on it. So just like Mohitji mentioned about events occurring after balance sheet date and conditions existing on the balance sheet date, the first and primary responsibilities of the management to comply with the accounting standards, and then we have to review and report on that. And So the management representation, it's more of the confirmation of the significant matters rather than an alternate to the audit procedures. Parvinji, many times, we find that there is a change in the management that has happened during the year. Then what are the responsibilities of the management in such situations where the current management, they were not present during all the periods that are referred to in the auditor's report?
So, Vishal bhai, this is a very important aspect, and the standard on auditing gives you a very detailed guidance on that as well. But it's very, very clear. You are carrying out an audit which is for the year which is ending on a particular date. The board is providing, or the people who are responsible to prepare the financial statement, they are providing you financial statements prepared by them, and then you are giving your audit opinion. So the people who are at the helm of affairs, they cannot say that, okay, 6 months ago there was a different management and we do not know what they have done, but we are giving you financial statements. We will take responsibility only over the 6 months. No, it cannot happen. They are giving you financial statement for the whole year, and you are giving your audit opinion on these financial statements which are giving you picture of the results of the whole year or a quarter. So the current management cannot shirk away their responsibility of transactions which have taken place when there was a different management. So I think as far as auditors is concerned, they need to take a complete representation, and they need to ask the management to take the full responsibility, whosoever is the present management. So there should not be any compromise, because then again, if they say we do not know about the transaction, that it will go in a direction of scope limitation.
Right. In fact, Parvinji, there is one question which we have received from the participants. And in fact, I would request participants to please push in your questions so that we can take the benefit of the experts that we have with us. So, Parvinji, what has been asked, especially in case of the IBC cases, where the IPA has taken over, then what is the authority with respect to the EL, the MRL, sign-off, the board, and the delegation? We discussed a lot about that. So, in specific with respect to IBC cases, if you can throw that light, and then I'll pose the same questions to Mohitji also. Please.
See, the management of an organization has been handed over to this person who is being appointed by the court of law. So as far as the auditor is concerned, this person who has been appointed by the court of law to run the company, this person contains the power. So engagement letter has to be signed by this person, and representation letter has to be signed by this person who is, insolvency professional, who has been appointed by the court of law to run the company and to manage the company. Because this is something which is very, very practical question, very appropriate question. And there had been issues where the management had appointed an auditor, and then the IRP and this resolution professional has come into play. That person continues with the same auditor, but when representations are being asked, because the board has been dissolved, so this person takes the responsibility of the management. So this person will need to give the written representation and will need to sign off the representation letter and engagement letter in case required.
Right. Mohitji, would you like to add anything to that?
Yeah. This is a very practical and a very tricky situation. So there can be three situations. One, an RP is appointed. So the board gets suspended, RP is appointed, he takes over the charge. Another can be, say, in case of NBFCs, an administrator is appointed by Reserve Bank of India. And third can be a stage where the company goes to liquidation and a liquidator is appointed. So for a liquidator or for a RP, they are appointed by the court, so they can be constituted as court officers. So obviously, as Pravinji also rightly said, that they will give you these engagement letters. That is very important. And that also applies to a liquidator, because if you are auditing the liquidation accounts, the engagement letter has come from the liquidator. But practically, we have faced much difficulty when it comes to obtaining, representation letter. Because now, say, today the RP has come. Today is 29th April 2023. Today the RP has come. And now we say that, okay, now you have taken charge of the board. Now board is suspended. Only you are the person to whom we are, you are responsible for. So practically we face much difficulty from obtaining many informations in the representation letter concerning the financial statements for 22-23, because he says that I am not privy to any of the transactions. I am not privy to any of the transactions. So there we have also faced a lot of challenges. And similarly, when it comes to liquidation, so liquidator says that, look, I have only those records, these records available with me, which I have got access from the previous management. And the same thing the RP also says that, look, these are only records which I am able to provide you. So at times there happens to be some scope limitation, or you may say that certain documents pertaining to certain areas are not at all provided. So this situation really poses a lot of challenges. So engagement letter is not a problem, but yes, they will prepare the financial statements as per applicable reporting framework with the best of the evidence available to them. But especially in case of RP and liquidator or administrator, a lot of challenges are there as far as obtaining written representations lies.
Yeah. So my question to Parvinji, and maybe again the same question to Mohitji also. What are the auditor's responsibility in case the management fails or refuses to provide the written representation? Because this is a question which normally many members ask. And so, sir, what is the way out?
See, I tell you, generally this happens when you are doing audit of a branch of a large bank or large organization, and you are doing an audit. And this person who is sitting in front of you, he says that, sir, I am not authorized to give you any representation. I will not sign any representation. If you want, you have to write to the head office and take the representation. But actually, you are going to give a report on the financials of that branch, right? So you need that representation. It is required under Standard on Auditing 580. So if somebody is practically refuses to sign off, I will not sign. So whether you give a report or not, then what as an auditor, what is your responsibility? What are you supposed to do? So you look at the reasons why this person is refusing to sign the representation. So there may be, this person might be lower person in hierarchy. So you can pick up the phone or you can take an appointment and speak with the management, with those charged with governance, that we are facing a challenge. We are not getting the representation letter, which includes some of the critical matters like management assumptions. How have they arrived at those assumptions, and how have they looked into these provisionings and all that kind of stuff. Second point, and this guidance is again given in the Standard on Auditing itself. Second point is re-evaluate the integrity of the people who are refusing to sign that. So there may be a situation that person has actually done some manipulation in the financial statement, and that person does not want to get involved by signing any representation. So auditor's responsibility to relook at the integrity and whether there has been some discussions or some misstatements or something is there in the social media and all. And then maybe in some cases the person can say that, okay, I'll give you only oral representation. I'm telling you that this is happening like this and all, that. So you can make a record of the minutes of that meeting and then circulate it and document that discussion. That is also one way. But you have to really look at the integrity and evaluate whether this may have an impact on reliability of your financial statement, which have been prepared by the management. The third point is then auditor will need to take appropriate action. So the management or the person sitting in front is refusing to sign the MRL. There may be certain areas that person might not be comfortable with. So he will say, if you remove this paragraph, then I will sign. Or that person may say straight away, I will not sign any paper. You go to the audit committee and get your paper signed. And if you go to the audit committee, they also refuse to sign. Then you have a challenge in hand. Then you see what is required to be done. You need to extend your audit procedures. You need to enhance your sample size. You need to get into controls. You need to get substantive testing. You need to look into the other details, whether there is something, and whether you can reach or at your opinion, in a comfortable manner or not. So there may be a situation that it might be an ego hassle. There might not be any challenge as far as financial statements are concerned, but the management might have a ego issue in between, and they say, I will not sign. The other person will say, I'm not signing. But if you are getting comfortable with all the audit evidence, your audit procedures are indicating that your opinion is reliable, it is fine, then you document this is something happening. And I have reached to this conclusion that, even though they are not giving me this management representation, but ultimately they are signing the financial statement, right? That is also a representation they are doing. They are preparing the financial statement, they are giving it to you. So you can actually, it is responsibility of the auditor to take appropriate action if such kind of situation arises. And then if he reads in the newspaper that, there is some red flag has been raised against this group, and then he will evaluate whether he should give an opinion or he should withdraw from the engagement, or whether he should qualify the opinion, or whether he should just give a disclaimer, or he should withdraw. So the responsibility, ultimate responsibility of taking appropriate action is on the auditors only. Yeah. So this guidance is given in the standard on auditing itself.
Right. So, sir, that was very well responded. Mohitji, I would also like to share that, some of the members.
Add to this, just.
Yes, please.
Yeah. So this
in fact, Mohitji, I just wanted to add further to this question itself, and then you can also respond in the totality. See, especially like Parvinji also mentioned about the bank branch audits and all. And, during our interactions, we find especially the small, medium practitioners, when they are doing the audits of the small and medium entities or enterprises like small, medium companies or proprietorships, partnerships under the tax audits, where the technical requirement of the standards on audit and all is something which is very remote for those people to understand. And they typically, and these are the words that our members have used, बोलते हैं कि आपने पूरा ऑडिट तो कर लिया, अभी आप हमसे फिर से साइन करवाते हो, तो आपने ऑडिट क्या किया? See, these are the things that come. And now when some member for any reason, actually might not have documented the MR till the last year and wants to actually build up the file with the letters after listening to our webinar, and they feel that, this is must, and they want to start from March 23 financials, and then suddenly you will find that such proprietors or partners or the directors of small companies कि लास्ट साल इतने साल तक ऑडिट किया आपने तो लिया नहीं, अभी अचानक ये कहां से आ गया, तो what would be your guide, your support, your hands-on? So I just wanted to top up the question with these ground realities, that how we can help members in improving the qualitative aspects of their audits. Yes, Mohitji. Sir,
very correct. What you are saying is very correct, in the sense that a few years, quite few years ago, when this practice was started, for small, medium enterprise, especially for proprietary audit or tax audit, so what we used to ask the management, like institute has provided a guidance note on tax audit. Say, for example, if we start with tax audit, and a lot of information are required to be filled in the tax audit form 3CT. And we all know that small proprietorship or partnership or even private limited companies, they would not able to fill the form. They do not know who are parties under 40A2B. Only we have to make them understand that, look, who are the parties under this 40A2B. They do not know what are required to be reported under 43B. Again, we have to explain them. So what we used to do, besides taking an representation letter, we also get these form 3CD, each page of the form 3CD signed by the management. So this is one aspect. But yes, starting point, as Vishalji you said, is very difficult. But then we have, I should say, no option but to get this engagement letter signed on some pretext or the other from the management, because whenever you do something which you have not done in the past, there will be always a resistance. And as we said, that change is not easily acceptable. But be as it may be, whatever is required, it is to be obtained. And so management, then the people, auditors who have not obtained in the past, have to make all efforts that they should, and make all attempts to obtain representation letters from the management. When it comes to, say, tax audit, small proprietary audit, we also get this form 3CD signed by the management. And as you rightly said, that वो भी बोलते हैं कि भाई टैक्स ऑडिट हम भी तो अपलोड कर रहे हैं, आप तो हमको बना के दे रहे हैं, आप अपलोड कर रहे हैं, हम भी तो साइन कर रहे हैं. But then there is a requirement. And one more thing I would like to add, like when we prepare the tax audit, what we do not just simply fill the form 3CD form, which is given by the department. We prepare the form 3CD physically. A report on in form 3CA is obtained, is prepared by us, and then in form 3CD, because in electronic form 3CD आपके पास ज़्यादा scope नहीं है लिखने का. Either you write yes, no, not applicable in most cases. And there may be something like, say, in section 14A, expenditure, amount of expenditure inadmissible under 14A. जो हम electronic form 3CD है, we can only put a figure, we cannot write much, or I should say nothing, we cannot write anything. But then we rely on certain judgments, and based on certain judgments which management again provides to us, we give an opinion that this amount, whatever is quantified in 14A as amount inadmissible, is based on these judgments. So we should take a hard copy of, we should prepare a hard copy of form 3CD that should be signed, and again that should also be uploaded with the electronic form 3CD. So this is all about small proprietary units. But yes, just to add to, I think Praveenji has covered everything, but what is very important that we must understand and make the management understand that, look, the financial statements which has been prepared, it is your responsibility to prepare the financial statement. It is not the auditor's responsibility to prepare financial statement. It is your responsibility to prepare financial statements as per applicable framework, be it the Companies Act or be it any other regulations, and you are required to disclose all what is required to be disclosed in terms of, say, Schedule 3 of the Companies Act, Companies Ind AS Rules 2015. Now, again, coming to this engagement, if the management does not provide, you see, in the written representation, I should say, not engagement, written representation, when we take the engagement letter, we say that the auditor should be provided all information and access as agreed in the terms of the engagement, and that all the transactions should be recorded and reflected in the financial statements. So these are the two or three responsibilities of the management. And without taking a written representation from the management, confirming this fact that yes, we have the financial statements which we have given to you are in accordance with the applicable framework. We have provided access to all records and documents which ought to have been provided, and that all the transactions have been recorded in the financial statement. If these are not there, then as Praveenji was saying, that yes, auditor should check upon the integrity of the management, why it is not providing, and again, then the tools which is with the auditor is SA 705, 706. He may modify the opinion, qualified opinion, adverse opinion, or disclaimer of the opinion, as the case may be, in the circumstances of each case. And yes, this is very, Vishalji, you have hit the nail at that. This is very important, and I think many of us in Calcutta, many small practitioners in Calcutta also complain, but then जो करना है वो तो करना ही पड़ेगा.
मोहित जी, Calcutta नहीं, ये पूरे इंडिया का है. Parveen ji would also agree. He would also have a lot of friends. Ruchika is also smiling. So that itself gives out the thing that this is a difficulty that all our SMPs they normally face. And I would then
एक बात मैं बोलना चाहूंगा सर, डिफिकल्टी आएगी जब तक ऑडिटर काम छोड़ना नहीं सीखेगा. माने आपको लेना पड़ेगा, जो करना है वो करना है, बिकॉज टुमारो इफ अ प्रॉब्लम कम्स नो क्लाइंट विल कम टू योर हेल्प. सो जो करना है वो तो करना ही पड़ेगा, आज नहीं तो कल करो. और अगर सब ऑडिटर ये सोच के करने लगे कि भाई नहीं आप देंगे तो हम नहीं करेंगे, 10 आदमी ऐसा बोलने लगेंगे, तो जो नहीं देता सब देने ही लगेगा.
Sir, there is another dimension to this, written representation. Like one of the representation clause says that nothing has come to our knowledge which is a fraudulent and we have not carried out. So if that person, why the auditing standard is saying that auditors need to reevaluate, that this person is not ready to accept that no fraud has come into their knowledge. So that means something is in their knowledge which they do not want to tell us. So that is something which is important. And I agree with you, Mohit Bhai, absolutely agree with you that what is required by standard on auditing, we need to insist that if you have to sign, you have to sign. And, one of the client who was, acting very difficult, I told that client that in any case, you are signing financial statement, you are signing on the balance sheet, you are signing on the notes to accounts, you are signing on all these papers before, it comes to me for signing. So what is wrong in this? What is different? I mean, in any case, you are not telling a lie there. So you are, there's additional representation also, which is part of. And practically when you are dealing with the small, units or small clients, generally all the papers are given together for signing. So this person will sign all the papers together. So my advice to my fellow colleagues is always is that, add that paper also into the financial statement, P&L, balance sheet, notes to account, MRL, engagement letter. Engagement letter in any case has to be before, but all these papers have to be given together so that they sign in one place.
Sir, अब तो peer review भी mandatory है. अगर हम नहीं लेंगे तो आप सर्टिफिकेट भी तो नहीं देंगे.
Right, sir. Correct. In fact, while this deliberation was going, I was just thinking, and since lunch is also approaching, so I was just thinking, that EL and MRL is like the soup starter and the dessert. In any party, any dinner we go, main course तो होता ही है. But at least हम लोग जाके पूछे soup starter में क्या है और end में पूछते dessert में क्या है. They are mandatory. Main course आप कम ज्यादा कर सकते हैं, but ये तो mandatory. I think this is what we need to keep in mind, that we must have the EL and the WR or the MRL. Make it a mandatory thing, and automatically the main course will fit in between. So
you are talking about lunch again and again, sir.
And one more thing, one key takeaway from the discussions that we had with Parvinji and Mohitji right now is that please, for the EL, do not wait till the sign off. See, normally we go at the last minute, and that is where many times discussions start with the management or TCWG, those start with governance, they ye dena hai, nahi dena, isko aise karna hai. I would look at it, friends, that if you have not, if you want to start the practice of EL, which is required, please start from tomorrow or from Monday. Start preparing the engagement letter and send it off to the clients whose audits you are going to do for March 23. So that if there are any discussions, deliberations, or anything that is to happen, you have sufficient time for that, and it's not a last-minute rush that is there. So I would say that start as early as possible, and then once it becomes part of the routine, it becomes part of the cycle, then you will not face any difficulties thereafter. It's the first time that you will face the challenge, and then it becomes a recurring thing.
Sir, we can just take one question on this only, on the engagement letter.
Yes, yes.
Dropped up from a participant only. And it continues to what you are saying, that, the engagement letter, we talk about dating the engagement letter. So what Mr. Pravesh Kumar's query is, can it be, after we file the ADT 1?
No, clearly. There's no line to it. There is no explanation to it. It cannot be.
Yeah.
But just one point, once the auditor obtains the appointment, the management files ADT 1. So generally we obtain the engagement letter thereafter, generally.
Sir, yesterday I was just going through the quality review board annual reports, which had, observations with respect to the engagement letter and the management representation letter. So I saw a couple of things there. Like one was it's not a copy of the same is not sent to the audit committee chair. So can we throw some light on this? It's not specifically written in the standard, but the illustration under the standard talks has mentioned a copy to the audit committee chair also.
Sorry, can you please repeat?
Sir, we were just going through the quality review board reports, annual report, which talks about the deficiencies. And I read that, the engagement letter is not sent, a copy of this is not sent to the audit committee chair. While the standard specifically does not lay so, but the illustration which is given at the end says a copy to the audit committee chair. Can we throw some light on this as well?
So generally when, this engagement letter, so who is actually engaging the auditors? Basically, it is responsibility of the audit committee. So when the audit committee, which is working on behalf of the board, is, appointing the auditors and auditors are accepting, it's very natural. And that's why it is coming in the auditing standards that the letter has to go to those people who have appointed them, because you are accepting that. That's why the quality review board and the report which you have seen there. But when we look at practically the audit committee, most of the people are independent directors. They meet once in a quarter, but the auditor has to accept the audit engagement and they give it to the people who are responsible and then ask them that, okay, you get us signature of those people who are those who charge with governance or people who are authorized by the audit committee and the board of directors to sign up that engagement letter. So it by defaults go to the audit committee by defaults. So practically speaking, they take it and they keep it in the agenda papers, and in any case it is communicated to the audit committee. But many times when these companies which are listed companies, specific mention of the audit committee chair is not mentioned on the letter. So it is a good suggestion by the technical review board that it has to be mentioned clearly on the letter that it has to be sent to those charged with governance, but a copy has to be given to the audit committee chair also.
Thank you, sir.
In small entities, I think it's the board of directors only who will be receiving it, and in any case signing.
Yeah.
Sir, just Ruchika.
No, sir.
Yeah, on this ADT one, I was just jotting down some of the documents or the sequence of events, and maybe Parvinji and Mohitji, you can just guide the members as to what typically it should be. So now we have the appointment letter, we have communication with the previous auditor, then we have the acceptance, we have the ADT one, and we have the engagement letter. So typically, if I look as the opening activities, these are the 5. And typically, what should be the sequence? So first, the auditor would get the appointment letter because it has been resolved at the AGM or whichever is the authority appointing the auditor. Based on that appointment letter, the auditor would communicate with the previous auditor as required by the Code of Ethics. Once typically the NOC is received or there is a reasonable time then they would send the acceptance to the company. Then based on the acceptance, the ADT 1 would be filed and then the engagement letter would be signed up. Is this the sequence or there is anything else, just for the benefit of members, so you can throw some light on this?
So this acceptance is the engagement letter, Vishal Bhai. So when you receive an appointment, that time you send the engagement letter, and which also includes that you are accepting the responsibilities, and these will be the responsibilities, these will be the terms, this will be the fees, this will be the timeline, and this will be. So when you send this, only after that the company is filing ADT 1. That's the sequence.
I have a little different view, and then again I have to recheck myself. But generally, what we do, once an appointment letter has come to us, and we also ask along with the appointment letter copy of the resolution. because members would appoint us, so we want a certified copy of the resolution. And then we give an acceptance letter. Engagement letter often takes time because fixing the responsibility between the management, the timelines for each, like for say SA20, that is also covered in the engagement letter. So when will the management provide us all the documents pertaining to SA720? So generally, we feel that after we give the the acceptance letter, engagement letter takes a little time to be drawn, and that engagement letter need not again be filed. This engagement letter need not be also filed with ADT1. So we generally takes subsequently. But one point more, before you take a management gives you an appointment letter, then we also management also asks for a consent letter, that whether you are willing to be appointed, and we give our consent that yes, our appointment if you make within the prescribed limits, and we are otherwise not disqualified to be appointed as auditors.
Right. So that consent letter would precede the appointment. So
yeah.
Before it goes as a resolution to the general members,
yeah.
I think the consent letter is what the board requires.
Yeah.
So typically, we have the consent letter, then we have the appointment plus the resolution, extract of the resolution regarding the appointment of the auditor. Then we have the communication with the previous auditor, and then like Parvinji mentioned that if it is a small entity, then the EL can itself be the acceptance. Now, because there is no need of an audit committee that it has to go through or be laid before, and things might be simpler over there. And then the ADT1 can be filed. And in case it is a listed company or a large entity where there are certain procedures which need to be satisfied with respect to the engagement letter, then the acceptance or something is given by which the ADT1 is filed, and subsequently the EL, the draft of the EL is shared with the company which is placed before the audit committee, and then that is signed off. So typically, so both alternatives are possible depending on the entity size, structure, and their internal, I would say those charged with governance, the formalities that are required in that. Mohitji, what if written representations are modified from that what has been requested by the auditor?
So written representations are required for, as we said, that management has to accept the responsibility for preparation of financial statements, free from all errors, fraud and misstatement, and then auditor has to be provided with all access to all the documents and all. So if these things are there in the financial statements, and auditor and the management modifies a written representation from what auditor necessarily asks, this does not mean that the management has not provided the written representation. So if you see para 9 and para 10 of SA 780 lays down two important things. So if these two are confirmed, then again the auditor has to evaluate that what are the modifications. Now, if the modifications are something which casts a doubt about the integrity of the management, and management does not provide representations about para 9 and 10, which talks of the preparation of financial statements in accordance with the applicable framework, free from misstatement, fraud, and error, and they have provided access to the all documents, information, and the financials are true and complete. If they do not provide, a statement on this, then our guidance on SA 580 says that the auditor in such a situation shall disclaim an opinion. But yes, there may be situations that management has provided the written representation conforming to para 9 and 10, but in relation to certain items, it does not agree with the auditor and provides some modifications. Then the auditor has to evaluate whether alternate audit evidence is available from which he is able to satisfy or not. If his auditor is able to satisfy through other audit evidence, then auditor may not disclaim the financial statements. But if para 9 and 10 are not complied, then standard says that the auditor has to disclaim.
Sir, just a continuation of what we answered about ADT1. The participant wants to know, what if the ADT is filed for 5 years together?
Yeah, ADT is filed for 5 years only.
Then there is no change in the scenario. That's what I was wondering.
No, so ADT, nowadays appointment is for a period of 5 years. So ADT एक ही बार file होता है. But engagement letter you take every year, or as Praveen ji was saying, if only there is a change in circumstances which require modification, change in fees. But ADT one तो एक ही बार file होता है. But yes, year after year they will take you confirmation, consent from you that आपका जो appointment है that it is within prescribed limits and all, and you are otherwise not be disqualified to be appointed as an auditor.
Yes, sir.
Disqualified to continue as an auditor. Although appointment is made, now there is no ratification also. Appointment एक ही बार हो जाता है.
Sir, while the question box is flooded with the positive comments about the speakers, that they're really, the way the conduct of the session has been really qualitative coming from the CAQ, and they're actually enjoying. And especially if you have mentioned that, with these basics where we are not very clear about the basics, why I believe that, with the fundamentals are strong, then the quality does work. And that is what, the audience is with me in that. So, sir, one more question we'll take up from the participant. It is that, they say that MRL is not a document of defense to the auditors in case of any requirement that is not disclosed properly in the financial statements. Please guide, as there are judicial pronouncements on this. What do we do with smaller companies where the turnover is 40-50 lakhs and with no major asset base? So he wants to know, I think the judicial pronouncements are there when we talk that MRL is not a document of defense to the auditors. Sir, it's open to all, anyone who can.
So I may start, Vishalji. Yeah. So I'm not aware of any judicial pronouncements in this regard, but yes, it can be said both ways, that they are of defense and they are not of defense, because there have been situations which we have praised practically where MRL has been a document of defense. Say there is management has filed a case with NCLT or with a court in relation to a party subsequent to the close of the financial year, in relation to a major trade receivable. We have got the confirmation of balances also from the trade receivable, but management has not told us that they have filed subsequently case with the other party, and which has led to, because of a financial deterioration in financial health of the party. Or again, there may be certain judgments which may have been passed against the management against the company, and that has also have subsequent to the close of the financial year. Generally, what happens in such cases, we check the legal expenses and we try and find out whether any cases have occurred. But management has not told us all these situations. But in the representation, they write very positive that nothing has happened beyond the date of the balance sheet. So these things, add a defense to you, because even otherwise, if you audit the financial statements, आपको ये पता नहीं चलेगा कि whether कि subsequent year में अगर case file किया है, तो how do I come to know whether any case has been filed or not? If a debtor situation of a debtor has gone bankrupt and all, so it is not auditor's duty कि there are thousands of debtors, वो सबका screening करे जाके कि कोई bankrupt हुआ कि नहीं, because we send the external confirmations, we get reply to the confirmations also, because it may be a transaction which is happening only in the current year. Past का भी नहीं है कि 3 साल से ज्यादा पड़ा है तो we apply other procedures also. So engagement letter at times adds to great defense. There are whistleblower complaints that has not been recorded, and there may be some fraud. There may be some fraud that has not been recorded, not informed by the management to us. And by using all our procedures, audit procedures, we are also not able to detect that. It may so happen. So then these written representations again help you, because these written representations are also coming from the top of the management, who again make a false statement in the director report also, who again make a false statement in the your representation letter also, that the financial statements are in compliance with law, free from fraud, error, material misstatement. So सब चीज का member should note, सब चीज का बहुत use है, and our standards give lot of guidance. Even we have standards of illustrative representation letters, हमको क्या लेना है, तो हमको उसमें भी बहुत मेहनत नहीं करना है. But lot of material is there on the website of the institute.
Right, sir. Sir, one more question which says that what if the vigilance department is not showing full report regarding an employee who has committed some fraud, He says that we have been restricted as auditors to focus only on the financial related frauds by the employee. Also, under which section can we counter them to show their full report? I don't know.
आपको engagement letter में रहेगा. You have provided to access to all documents, records, information which have a bearing on financial statement. Now, if an employee has committed a fraud और उस fraud का access आपको नहीं दे रहे हैं, so then you are not complying with the terms of the engagement because you are required to provide us all information, records, whatever we want for the course during the course of the audit. Now, अब वो उसका financial implication है कि नहीं है, that the auditor has to decide.
Yeah.
Assuming nahi dete, then we have to write to the management that look, this is there, you are not providing. Let them give representation because हम लोग audit में inquiry भी करते हैं. We shoot letters to the management in relation to various transactions, and we should shoot. अगर हम नहीं करते हैं, तो we should start doing this because during the course of management जब हम अपना audit observations देते हैं and we have certain queries, we write to the management and everything is on record. अब आप letter देंगे तो हो सकता है they may take the letter, they did not give in acknowledgement. So what we now advise, mail भेज दो. And mails are again recorded, so you have a trail of evidence also that yes, you had shot. And seek replies. नहीं आएंगे तो auditor के हाथ में तो वही tool है. ऐसे 705 You have to, qualify the report. Emphasis matter अगर if it is not material to the financial statements. Other matter if it is again not material to the financial statement. And again, which is not a qualification. But करना तो पड़ेगा, लेना तो पड़ेगा. नहीं तो we have to document everything. मैंने auditor सर विशाल जी एक बात बहुत जरूरी है which I think members should also know कि responsibility, truth and fairness का auditor पे भी है. तो अगर we are unable to get access to something which may affect the truth and fairness of the financial statements, so we should not hesitate from qualifying. But before qualification, we should shoot management a letter that look, this is the thing, आप हमको नहीं दे रहे, so there may be a possible qualification so that everything is documented and in hand with us.
Yeah, I fully agree that the responsibilities of the auditors are also onerous, and we also need to ensure that whatever is required, and that is where Parinji was also mentioning about the expectation gap and all those things. So Parinji, would you like to add to what Mohitji mentioned as a response?
I think Mohitji has absolutely covered the whole point very, very nicely. And this is something which is absolutely on the mark.
Sir, one more participant wants to know if there is no CFO who can sign the EL. That I think we have answered, but specifically it is flowing now, so I thought I will read it.
Board of directors need to sign that.
And sir, do we need engagement letter for all engagements when we say, we need statutory audit, tax engagement, we need separate engagement letters? And,
so if one engagement letter can talk about various activities which you are going to cover and your responsibilities related to that. So that because standard on auditing wants you to have an engagement letter. Now, if you are doing, let's say, statutory audit, tax audit, as well as some certificate, corporate governance certificate, one engagement letter containing all these scope of work should be sufficient enough. So you don't need to replicate, make 3 different letters and get them signed 3 different letters. It is fine if you take one.
So does that go for statutory audit and limited reviews as well?
Yeah, of course.
One point I would like to add, like many of the members even certify forms which are required to be filed with MCA. For that also you need to have an engagement letter. अभी एक DC का केस हुआ था, so for filing of an active form. So the disciplinary committee also asked for the engagement letter. कि you have certified this form, give us a copy of the engagement letter. So many a times हम लोग जो certify करते हैं उसमें लिखा हुआ भी है form के नीचे that I have been engaged to certify this form. So engagement letter even for those forms, even for all certificates we need to obtain. हाँ, ये हो सकता है कि हम साल में एक engagement letter ले लें, for covering everything what we are required to do, but then it is required. And sir, एक point और मैं यहाँ पे add करना चाहूँगा. Members should know that under section 144, an auditor other than audit can do only such services as are permitted by the board of directors. Therefore, other than statutory audit, if you are giving any service to the management, assuming it is not a barred service, then that must be board approved. If some service is not board approved, say we are performing NCA certification, if we are doing tax returns, and that is not board approved, then that is a violation of section 144. So, also take enabling resolutions from the management that these services are specifically you are authorized to perform, authorized to do.
And Vishal bhai, one more very important aspect is small and medium practitioners. They are approached by various people that we want to apply for visa. Please make us a certificate of net. Or we are going to the bank. Please make this certificate. For each and every activity which you are doing, you need to have an engagement letter. Even for a small certificate.
Exactly, sir. And
very important.
Sir, I know it is outside the scope of this webinar, but actually when we talk of our professors, brothers and sisters, and I've seen the way the expectations are moving, even now it is time for us to have EL for non-assurance engagements or non-audit engagements also. Like an income tax return filing. It's a compilation engagement, I would say. Though we are not certifying the computation or the ITR, but we are gathering all the information from the client. We are putting it in the software and uploading it on behalf of the client. And I've seen firms have started engagement letters with respect to ITR filing, the GST returns that they are filing, compliance related work which does not need assurance. But still with respect to what we discussed since 11, what we have been discussing since 11 a.m., that the roles and responsibilities of the client and that of the practitioner has to be very, very clearly written in black and white. And we should extend it beyond audit and assurance engagements also. This is what is the overall feeling that has been developing. And so I thought this would be the right platform to share.
No, absolutely.
Absolutely. And sir, this will also help in transformation. आपको तो आगे बढ़ना पड़ेगा, SME को आगे देखना पड़ेगा. So these are things for transformation.
Sir, in the interest of time, one more question from a participant who says that, the letter has been signed by an MD who is not authorized by the board and he left the organization in between the audit. So now where do we go?
So go to the board and ask them to give authority that MD to sign specific authority for this particular thing. It can.
As I said, the engagement has already started.
And,
the documentation says that you have to have it before the commencement of the audit now in the middle of the year. Anyways, he was not authorized by the board to do so. So the bigger question is...
Board can say that, okay, he has signed and we give our authority. It was with our approval, but we are formally minuting it now. I'm giving you a practical solution.
Yes, that's what we want, and that is what the...
It would be more of a ratification of the EL that has been signed by them.
Minuted in the board meeting, yes.
And one last question, sir. Do we need a previous communication in respect of tax audit too? Communication with the previous auditor?
Yes,
of course. There is no doubt.
And in fact, let me clarify, as per the Code of Ethics, it is not the tax auditor of the previous year. It is the previous tax auditor. So even if 3 years back, that entity has undergone tax audit where a professional would have signed off, subsequently 2-3 years gap आया बीच में जब tax audit apply नहीं होता था, आज apply हो रहा है, तो I have to communicate with the previous auditor who had signed the 3 years back tax audit report. So I think it is to that extent that we need to clarify.
Okay.
Agreed.
So it is this was also new to me, 3 years or even beyond that?
Beyond, मतलब जब भी whosoever has last signed, मतलब कभी भी एक बार भी sign हुआ है previous में, so it is with the previous auditor, not the previous year's auditor.
Okay. Very important.
You have taken up all the participants' question. The
Yes,
others are
sir.
repetitive.
We are able to finish 10 minutes before the lunch time.
नहीं sir, और questions है. Don't worry sir. ऐसा तो नहीं करेंगे.
No,
Sir,
I've excluded the repetitive ones, of course.
Yeah. So my question to, in fact, both, I would first request Parveenji that whether in the MRL, there can be a qualifying language that subject to such things or as per the information and explanation or belief of the management. Words like this, whether they can be allowed in MRL.
I think there has to be an evaluation of the auditor whether this qualification will have an impact on their opinion or not. If it has, then auditor need to be extremely careful. And then 705, 706. So there are other standard on auditing which are giving guidance on how to write a report. In case you find that there are certain areas where there is a qualification, because the management themselves are not very comfortable in giving that kind of a statement. But if auditors feel that this particular qualification in the representation, it is fine. I mean, it is not impacting the results, and it's not impacting their report on true and fairness of the financial statement, then the auditor will take their call accordingly. But they have to be extremely careful. It's not a simple thing. If management is giving qualification in their representation, the auditor need to be doubly sure about what they are going to write in their report.
Right. Mohitji, your take on it?
Yeah, sir. What I understand, there may be two situations. One, management in the written representation makes a qualifying language that it is to the best of their knowledge and belief. So, and one, management may give a qualifying statement that we are unable to provide you, there has been a fire or a lockout and we are not able to provide you access to the record. The second situation we have dealt with. Now, the first situation, it happens many a times, like for say actuarial valuation or for say legal cases. Management relies upon the certificates which are given by the councils, or in case of actuarial valuation, because management is not well equipped for performing actuarial valuation, and the assumptions which the actuary take in relation to say the interest rate and the other actual assumptions. So the standard also talks of different situations such as actuarial valuation, then legal cases where councils gives opinion, and also they provide information as to what would be the possible outcomes of the case and the possible liabilities which may arise in either situation. So in these types of cases, generally management in the management representation letter adds the qualifying language in the sense that to the best of our knowledge and belief, we said that the provisions for all legal cases have been made to the best of knowledge. But what is important is that the auditor should be satisfied that the representations are being made with the managements and those charged with governance and who have appropriate responsibilities and knowledge of the matters who are giving this representation. So once this is done, then that is fine. Then I think that is fine.
Right. Parveenji, last question to you, that whether there would be a need that once an MRL has been issued, there would be a need for updating the MRL, then in what situations or what circumstances would that be required?
Yeah, this SA 580 gives you a very detailed guidance again on that, and it will depend on situation to situation. If there is a requirement of updating the management representation letter, that's what you're saying. That whatever statement was given by the management, and then there is a need, there was some situation which has happened, some event which has happened, which would require an updation. Like, for example, something has come to their knowledge and there is a requirement of updating. So basically, auditors and management have to decide together that, this updation is required, and then the auditor can accept that updated management representation letter as well. Mohitji may add to this.
Yeah, I think we have covered entirely, Pravinji.
Yeah.
Sir, one
So-
last question which has come from a participant is, while taking confirmations from the debtors, do we send, it's necessary to send a physical external copy, or we can send it through mail also?
Both are acceptable, but
Deliver-
this should go from the auditor.
Auditor.
One auditor should control the confirmations.
There was a situation where, there was a auditor who was doing audit of a company which is into IT business. And they said that, nowadays it is, there are tools available that a mail will come to you, depicting that it has come from, let's say, Vishal Bhai. But Vishal Bhai might not have sent that mail. So there is a possibility that, those kind of, if the company actually wants to do a fraud, so even if you have sent the mail of confirmation from your email ID, it might have gone to that person, but the confirmation which is coming might have been, there's spoofing is there. So when, it might be sent by somebody else and to me, it will appear like, it has come from the client. So, and there had been a statement given by the AASP as well, because some of the people were using some platforms, to give the confirmation and get the confirmation from the bank. So the AASP very clearly said that ultimately it is responsibility of the auditor. So we are relying on the third party, and third party does something which might be, there might be some leakage or some spoofing or some fraud happens in between. You cannot take a shelter that, I relied on this. No, it is not, it is not going to be on your defense. There was a very clear statement by AASP that it is responsibility of the auditors to see, whether the fraudulent activities have been to protect, that those kind of fraudulent activities, protect themselves from those kind of activities. So in present scenario where cyber crime and these IT things have taken place, and a lot of these things are happening, auditors need to be extra careful. I agree with Mohit Bhai that it is okay to send email and get a confirmation on email, but copying various people, including the management, including your own team members, including your partners, so that once if something has come back and you send it again, that person may say that I have not sent it. Then so there is 2-3 communication of those mails will make you doubly sure. But of course, when you are doing an audit, you also get an idea of what kind of response you can expect from the client. And if you are having your professional skepticism, then even your person sitting on the computer and opening the website of bank and looking at the bank statement, that website might also be a fake website, right? So need to be very, very careful. So auditors' responsibility is to use their professional skepticism. So this concept has to be kept in mind. Of course, you can rely on the email confirmations also, and the speed post and other confirmations also. But ultimately, responsibility of the auditor will be in case there is something goes wrong. So what kind of professional skepticism you had assumed, and what kind of activities you carried out, what procedures you carried out.
Right. So, friends, I would like to share that at CAQ, Center for Audit Quality, we have a Twitter handle, CAQ ICI. And I would request members to kindly follow that, because we regularly share information with respect to the qualitative aspects of the audit. And if you can follow that, then that would give you regular updates with respect to these issues that we normally flag on our Twitter handle. I would just like to share that the quality review board they had mentioned some broad findings with respect to the SA 210 and SA 580. With respect to SA 210, that is on the engagement letter, they had mentioned that the audit firms, they were not issuing the audit engagement letter before the commencement of audit. They were not addressing the engagement letter to the board of directors or to the copy to the audit committee chair. The engagement letter was missing from the audit paper file, and it was also not mentioning the terms for reporting on the internal controls over financial reporting. With respect to written representation, some of their observations were that the written representation from the management was dated after the date of the auditor's report of the financial statements, and also that the written representations were not obtained, supplementing the representations on the financial statements. Firms were also not obtaining the MRL in respect of related parties as per the SA 550. MRL not including the management's responsibility for design, implementation, and maintenance of internal controls, and MRL was not obtained on significant assumptions or estimates. Now, these are some of the observations, findings of the QRB, and I very strongly believe that these now, after today's session with our learned faculties, these would fade out completely from the report going forward of the QRB. So once again, heartfelt thanks to Parvinji and Mohitji for their presence and enlightening the members on the importance of the EL and the MRL. And now I would request Ruchika to kindly propose a formal vote of thanks.
Thank you, sir. Thank you, Mohitji and Praveen, sir. It was really a great session today. We have discussed, I think, threadbare MRL EL today. Of course, few members are asking if there is an updated version on EL and MRL, which is available after today's session. So I said this is a recording which is available on our ICI TV page. You can access. Of course, we'll share it with the speakers, both of you, and participants, that they can go to ICI TV, and not just this session, they can watch any earlier sessions also of our Quality Cafe. We have taken a number of different sessions on audit quality aspects. Thank you so much, sir. It has been great learning today. In fact, I always thought it was quite the easiest of the topics to talk about. But today, yeah, I did have a different perspective to the easiness. But yeah, it's an eye-opener. Thank you so much, sir. Thank you, Vishal, sir, for being there. Thank you so much.
Thanks, Ruchika and the whole team at CAQ. Thank you, Parvinji, Mohitji, once again for your presence. And thanks to all the participants. Thank you. Enjoy and have a great weekend ahead.
And lunch too, sir. Thank you. Thanks, sir.
Bye. Thanks. Bye.